that you can do something with a bot. Um, so today is about just for those in the channel that are already following for a longer period of time. Uh, a little bit of a heads up that there is a few more things that can um, expand systems on your end, where you should have the choice of what to hip pocket and what not, depending on what tools you're already using. And I just show basically a little bit deeper into my toolbox for everybody participating in regards to what you can do to expand your own toolboxes. For that, you can choose, Matthew. We can either go through pictures from the channel, or we can go and you update me the charts, whatever is more convenient for you.
You have charts that you already created in your channel
Uh,
you want to
I
show?
will for I will forward them right now either
Oh, that
into
would be
your channel
easier.
and you
Okay, yeah, that's
to
better.
to you, or I will put them in the channel, whatever you prefer.
Yeah, yeah. Could you put them in the channel, and then I'll just like if you want, I could share the screen and blow it up.
Okay. You would still then need to forward them to change the screen at that time.
Yeah, that's cool.
Okay. So I put them right now into the red channel is fine.
Yep.
Good. Sorry. It's a lot of charts. Give me 1 second. I apologize. Okay. It's a lot of charts because I will explain a lot of little different knickknacks of little mini tricks and little mini adjustments that really are helpful for traders. So this is, as I said, a little preview for what's to come and a little explanation of how to use certain things to make your execution mainly easier. Okay, so you have to go back in my channel to, did you find it?
Okay, 23 new charts. I'll start from the top here. You guys can't see anything yet, right?
Not
Not
yet.
yet.
Okay, good. All right. Just want to line up with the Kobe here. This is at 214. Now it's at 418. Here we go. I'll share.
Great.
Okay.
Awesome. Okay. Um, so the structure of the presentation is first come a few tips uh, that will be important then for the build-up of how to prep a trade. And then I will walk through that trade with my commentary this time that I took today live. Fabo, were you watching the Red Channel today?
I was, yes.
Okay, good. So then this will be easier. Um,
But up
so
to what extent I was like digesting all
no,
the
that's fine.
information?
It will be
That's
it will be fully explained. I was just curious whether you've been at the market today at all. So on this chart, what I marked is you already know our rules from the daily call. This is a 15-minute chart. Um, to the very left, you see that vertical dotted line. This is the opening of the session. We're looking at a gold spot. So this is, if you live here on the West Coast, yesterday afternoon, a day ago. And for the sideways to up call, there were basically two entries. They're both in one line marked at the lows that go from the very left to the middle of the chart in that horizontal white line. So two long entries with our classical wider double bottoms. Obviously, the one with that action-reaction principle right before, a few hours before the original session starts, was the attractive play. And this would be falling under the old rule system of wide double bottoms um, on a daily call sideways to up. And then I marked the session. I made this picture when the session was still open. So the session is marked in red within the yellow square. And the yellow square is the actual time segment of the session all the way. The red is how far the session has been going at that point where I made that shot. And I just wanted to encourage to think outside the box. Most people look at the New York session. So think about double tops and double bottoms also in regards to the session itself, because most people regard basically the session lows and the session highs as the daily highs and lows. It's just basically a refinement of saying you can refine your daily call to a very high degree. My daily call looks very different um, than the one of the rules that we studied the whole 2-year journey so far. As I said, this is for people who are now very familiar with the rules and want to basically upgrade into more nitty-gritty stuff. Next slide, please. Same thing here. Here we're looking at the S&P 500. This is an hourly chart. I have a general rule that you all familiar with, which is I construct my horizontal and also my diagonal uh, trend lines either to the bodies or to the wicks of the individual candles. But I want to encourage that when it makes sense, you have to be sensible with how you draw the lines. So again, the vertical line a little bit in the left quarter of the chart uh, signals the opening of the session that was yesterday afternoon. And as you can see, at the end of that bullish ending of yesterday, we establish a small range, meaning we're going through the doldrums steeply up. That's those three long uh, bullish candles up on the very left, a little bit further left, yeah, exactly. And then I marked there that end of the session. We have a retracement, and then we have a new high at the end that gets rejected with a little big with a wick, and then the new session starts a little bit later where the dotted line is. And today the high, I marked the bodies exactly, yes, and the bodies of the lows. And it makes very much sense because it's the expansion of the session from yesterday. So think in regards to um, sessions also what has happened the day before and mark your lines that are basically in brackets on a sideways call your entry lines for double bottoms lows and double tops highs for shorting based on what's most sensible. Don't go to the extremes if you want to get filled, or go to the extremes if it's necessary for still having good risk reward ratios and having still a good likelihood to getting filled. Um, Obviously, today the S&P session was untradeable. It was really bad job. That's more visible on the 15-minute chart. Okay, next chart. And here it's marked just as a refinement why I took the bodies and why I took of the highs and the lows, because for obvious reasons we had a lot of beards on the bottom and we had, as I said, on the top this yesterday overshoot. So that's why we also had these slight penetrations, but that was the spot to be marked. Next slide, please. This is also important. Um, Categorize your directional and non-directional segments based on time. So what you see in the middle of the chart, you see again this dotted uh, vertical line. That's the close of, this is a Bitcoin 15-minute chart. Yesterday evening, if you're living in Pacific time like I do. And then we're trading sideways. And then today's session, the session itself, like the New York session, which is obviously could be viewed independent of uh, for Bitcoin, but it just isn't, because volume now, where Bitcoin has become a major object for all markets to be held in all portfolios, it's dominated. We can see this also on the volume bars that are not present in this chart. Um, and as such, it is good to think like this, because we already know the principle is we're trading from sideways to up to sideways to down to sideways. There is these sideways separations between up and down, while a lot of amateur traders just thinking in prices going up or prices going down. Prices mostly go sideways. And time segments are a very good idea to expect after a certain elongated period of time, to have a certain direction or non-direction, to switch to something else nicely visible as today in this smaller time frame chart. Next chart, please. Um, Here we see the New York session, and it's not quite finished yet. Or was at the time when the chart has gone, when the chart was printed. You always see me talking about the open, the doldrums, and the close, the three sessions of the day. Think in that terms. Today, Bitcoin was fairly compressed in its opening session. And then in the doldrum, the bears were able to pull this down, and in the afternoon, and here is a good proof of foresight, which is if the action is in the doldrums, then typically we have a sideways session in the afternoon again. So that's what this white line here indicates, and you guys saw the market, how it ended. The afternoon session went sideways. So also categorize. What I'm basically trying to install is to think in those different blocks of time units, and use those as helpful measurements for your trading expectations and probabilities. Next slide, please. And here comes the idea of blocks. This is a daily chart of Bitcoin. Never watch your trades independent of the larger picture. This is the block of the last 2 weeks, something like this, a little bit less. And that's imperative. We'll to come to this later. So the yellow block here is the minimum of requirement of, if you want to take a position trade, to always have in mind where you are actually at. Next slide, please. Here is the blocks that are significant for the Muni principle, that darkish purple line. You see the overshoot to the left of the yellow block, and then the similarity of what we had 4 days ago. And that's significant for how you perceive where direction is, where will price most likely go, again for the daily call. Next block, please. Next slide, please. And here then, from the largest block, or I should say from the medium large blocks to the wider blocks to the smaller blocks. So it's always a process of contraction and expansion. Here is the contraction. And this is the most recent overshoot block. This is where you can take the measurements from, and you also see that there was this congestion prior before we shot the 200 moving average. And then it went down, and we revisiting is. So it's either way also a head and shoulders formation here. Next slide, please. One back. Perfect. So let's walk through how I came to the trade today. And it's very important to not just say, okay, what's for the daily call? It's very important to not just say, okay, tomorrow is whatever, likely a doji or likely a sideways because of, you need to see the whole picture. Um, uh, and I'll walk you through. Next slide, please. This was that day where the 200 moving was overshot, that where that elliptical white pointing out is, and it gives us a lot of data. As I said, it was this little bit of a head and shoulders. Don't think it in the classical methodology of whatever my necklines is, and necklines break. We don't trade breakouts. Everybody's aware of that. But more in regards to, okay, we're reversing here. Now, everybody might see at the time at the end of the day this reversal, but I did on that day actually walk the day through of thinking. So an amateur again would probably after that Dragonflight OG short the next day. And that's not the case because if you think about it, people who did a momentum short, they were in somewhere shortly below 65K on the highs of that day. Then the people who traded 200 moving average, but they traded confirmed a failed penetration. They're in somewhere when we have these peaks on the VWAP to the right, or where that little hole is, somewhere at 63, 600 or something like that. And then the people who use that midline of those diagonal trend lines, they also got in. So everybody is in. All the shorts had basically from 65 to 62, 400 time to enter. There is no need for aggressive entries the next day. So on that day itself, I already pointed out, um, just to say that this is not all like born after the fact, that these things are live documented in the PPT channel on that day. That for the next day, a sideways day is to be expected because this shorting is exhausted. So smart guys financed if they had a quad exit like we're using, or at least all the bears are satisfied because they're on a green note. Now, obviously, bar takeout traders who say, "Well, I'm only going in confirmed the next day below the close or even worse below the lows." Well, look at their risk. These are the guys who have the stop above that wick. That's who has a 2,500 point stop on Bitcoin. That's just nuts. So that's why we have that sideways day. But that sideways day gives no indication of that we continue long. It was just too dominant of how bears dominated that world. So a continuation to the short side is actually what's to be expected for that next day call, for basically for the daily call for yesterday. And I pointed out, should we go lower, then we probably will do that swiftly. That has part to do with the beauty principle of look at that green bar 5 bars prior, about the same size, posthum, obviously. And to the left, to the right, we have a value on the VWAP. Next slide, please. Here we go. That is an explanation of that value of that VWAP. And that's exactly measuring, and then see the wick on that day. Fantastic risk reward ratio. You have a very low risk of a stop. It's a very nice beauty principle. Look how the wicks are identical to that wick five. It's literally identical bar to the 5 day ago bar. That's why I pointed that out. I don't take a lot of shorts because I don't want to create too much friction for the blue room, because we generally have a lot of Bitcoin enthusiasts who have portfolios. So if I all the time pound shorts into the red room and make those successful, then that defeats the purpose that there's portfolio building and portfolio holding, and no need to pour, or hopefully, let's put it that way, those hints that I'm giving in the red room are enough help for those who trade from both sides. And I want a peaceful and fruitful environment for all participants, regardless whether they're short-term scalpers or long-term investors, or portfolio holders or crypto enthusiasts or whatever it is. It's just all about principles, but not about to show how to maximize profits in a channel or to feature myself. So this came to fruition. And then next slide, please. Um, Last thing, imagine that last red bar, which was today not being present. What do we have? We have an inverse V. So an important part for today's session is what I also pointed out again yesterday is there is a good likelihood, as much as we can get a turning point based on the beauty principle that will turn around, that the most dominant force is a continuation short based on the V, possibly with a bounce in between, which we basically had with that. If you're looking at that week again of today, we had a good move back up to 61,400, and then this whole thing faltered. So this as a, you have to have a storyline in your head for the daily call, for every daily call for today. So for today, the daily call was, okay, we had that head and shoulders on top, we had these reversals, and there was a breather. And that's very important, that little doji 3 days ago, where both shorts and longs have like, oh, okay, what just happened here? And then we had a quite swift and again pretty dramatic from a percentage perspective, three almost 3,000 point, 2,500 point move down yesterday, as we already had uh, 4 days ago. So feel that pain for all the ones of who are long. Feel that joy for everybody who is short. Feel like as we have in the classical daily call rule, um, who's long. How does it feel to be long? How does it feel to be short? And that's your competition. That's the people that you trade against. If the shorts are all feeling confident here because of the V, or if let's say the shorts feel confident because they made their first money, possible turning point long, whatever it is, go through the story and carry that story. Be flexible to change the story if the market tells you a new story, but don't see things isolated. These things in time blocks, trade blocks, organizing blocks, uh, price movement blocks, fractals, if you may, if it's horizontal, left and right. But but think in a structure that leads you to the trade. Next slide. Uh, I mentioned volume patterns today ago, that it's very important to look at volume because we are at these pivotal points of retracements in the crypto market, also from a time segment perspective of where we're getting towards elections. So here on the bottom, the three elliptical representations of volume at the same time in the last 3 days. We see here on the 60-minute chart these three time nodes, and you can tell uh, downward volume juicy, upward volume not so much, and then today downward volume juicy again. And we're talking about before the moves are. So this is the move basically in the sideways segments of the trading day from the New York session perspective. And or not only New York session in general. And then you see even more increased volume on the short side in the last 2 days when we actually had moves to the downside as well. This is a Bitcoin chart again. Next chart, please. Now we're getting to the actual chart of today, and I want to explain what my thinking is, or what my behavior is, both basically, and that my behavior is based on a thinking process that's not triggered by price, but a thinking process where price falls into certain behavioral blocks of what I need to do to have a good execution. Goes as follows. So first, this is just a copy of the chart that I posted in real time. These things are timestamped, so also a proof that this is not something posthum, because it's very easy to tell a story after charts are printed. This is all anticipatory now, and we're just reviewing it. So I said, if Bitcoin will be penetrating today's and yesterday's lows and trading near 60K, I will step in and take a long. So this is the prep, and this prep is early ahead. So you see the time print here at 8:39 a.m. Is when I basically warned everybody, and this is warning myself as well. So I did basically what I typically not do, because I don't want to encourage uh, trading, but I knew that I wanted to have a trade today to use for this presentation. So that's why I did this like leading towards a trade for the whole group in the red channel. Next chart, please. Uh, so a good hour and 20 minutes later, I referred to that prep mark, because now we were trading somewhere near to these lows, and I said the bears are pushing here. What I basically meant to say is this is going to happen. This is the time when we have to be aware of where price will leading, where and how price will be leading us. Next chart, please. So you see here the horizontal lines again, the vertical lines again in blue for the previous sessions. That little white line is the lows of today. And then if you go to the previous day, you see that the lows are a tad deeper. And price at this point was pushing against that previous doji bar towards the lows. If you imagine right now a line combining yesterday's lows, today's previous lows, it's basically a slight angle up, then it will exactly hit that button where price is at the time of this chart being shot in real time. So this is where basically my alert gets triggered for myself. Oh, okay, we're at the most aggressive, in brackets, long entry point, but I'm not interested at all to go long in here already from a risk-reward ratio, and because I made a daily call where I expected overshoot. And part of the tools that I showed earlier today are basically part of that daily call parameters that haven't been shared yet with the group of what I expect. So I expect today uh, that break of these lows is basically on my sheet. So I expect that 60K bounce Um, and it comes exactly at a time where I would like it to be, which is in the doldrums. So I also expected a time segment. I expect first it to be sideways and then to get directional. So here um, we have that first point of interest, so to say. Will the bears be able? And what the important part is when you have these stages that I will be walking through now, there's like 5 or 6 stages before actually the trade entry is coming. You have to do something. So at this point, I'm putting in that line of the lows because each time you release, so to say, something, because the problem here is the prep was an hour and 20 minutes ago. And you're already looking there for sometimes and compare with other charts whether this is still all good to go from a daily call perspective. But this gets very itchy throughout time. And make a note of it, this is the 1 hour chart. I do not change this. I know that the Blue Room has a very different way of going things about, but it's very important when you trade these longer time frame setups. Do not now go to a 15 or even a 5 minute chart because that will never sustain the patience that you need to wait for this trade because you have at least 1 or 2 previous entries that are losers. So don't trade the double bottoms here. If it's not your setup, even so it's a double bottom setup, but that's not the setup that I planned. That's why I said I want 2 lows broken. Then I want 60K. I want the action reaction principle as I always want. And I don't take any other trades. But if you're looking at smaller time frames, let's say even just the 15-minute time frame right now, you see way more bars. You see way more price movement because here, if you move 100 points, you can barely see it on the chart. If you go on a lot of smaller time frames, that bar that we're looking at is represented by 4 bars. So you see the relationship between these bars. Your mind is consistently triggered with what this could mean, where this could go, no up, no down, no, and you get exhausted, and at some point you just press the button and you go long. So don't do that. Stay on the 60 minute. It will be very calm because this thing barely moves here. We had a creep down at that point, anyhow, which is expected when they like push it against these lows. They do it slowly and slowly and slowly. Worse, even looking at a tape or anything. No, you don't. You don't. You just do these steps and to survive time because time here is in brackets against you. Um, you take the higher time frame, and as I say, you do the tasks. So the first thing that you do is okay. We're close to the lows. I mark the lows. Now comes the next part. Can you please show the next chart? If you would give me the next chart, please, Matthew. Okay, here comes the unforeseen. We touch the lows, and here comes the bounce. As I said, not interested. Not my trade. This is not what I want. I couldn't care less. Next chart, please. But what's important with that bounce is that it changes my probabilities. Since there was a breather in between from these 3 previous down bars, now I can actually expect that retracement goes a little deeper or in a different fashion. I was even considering to play possibly just trade half size, but the whole probability of the trade basically lost some luster. So the next thing that I do is here's that diagonal line that I was talking about. So we're going up, I make the diagonal line, that trade plays itself out, that little long, and then comes again pushing towards those lows. And we're at the daily lows at this chart. I said I wanted to penetrate both of those, the yesterday's and daily. So daily are here under attack. Next chart, please. This is why at that point I mark yesterday's lows and we're moving there also. So again, do these practices that you do something on your chart to release that tension that's a built up in your body. I even have a black spot on my chart where I sometimes just click into this thing just to be loose in my finger again, in my muscle tension, because as soon as your brain capacity is basically full, we we look for a release. This is what dogs, for example, do when dogs are on a leash and they cannot struggle with each other when they meet each other and they want to have a little fight, um, because they get restrained by their owners. Uh, Afterwards, they shake themselves. They just like, even though they're not wet, it looks like as if they would be wet and want to get rid of the water. But what it is all the tension that's built up needs to be released someplace for being back in that neutral position of being normal again. And this is nothing else, and you can do whatever kind it takes of a practice. Since sometimes with sculpting, there's no room for getting up and movement or whatever, your yoga session or going for a walk, which is the other breaks that you can take for the larger plays. These finger releases of just pressing the a fake entry button, so to say, or draw a trend line is plenty help enough. Okay, next chart. Or one before. This is very important. We're building a new bar. This is actually helping us because now we have uh, this long down bar, but it has a wick on the other end that's not fulfilled yet. And I come to this later or at another time what wick fulfillment means. Um, so this is a probability add of a possible good outcome for my trade. Now it's basically the first time that you start to getting in brackets alert, and this is why there's no more real-time charts coming because I need to execute the trade plus prep uh, the execution signal bar for you to be posting. And what basically now comes the last step, which is I need an action reaction at that zone where I'm expecting. My zone was from 6,010 and below. I would have taken this all the way down to somewhere in the 700 level. So this is the next thing is basically an experience field of action reaction to feel this out again. I do not go on a smaller time frame. I look at that print, that behavior of how the bar prints on the 60-minute chart, because otherwise you again in way too early, because we're still talking here uh, 62.56. So uh, we want the overshoot, not the double bottoms from yesterday. And you can look later at the real chart. It just I picked the lows by 7 ticks. So next chart. So we entered at 59973, and I think the low of that bar was 59966. We don't have that chart, but you can, just to verify, you can look that up. So we got this right on the nose. 7 ticks risk versus a financing point. I think we financed at 311, uh, 60,311. So that's 271138. That's 338 versus 7 tick risk. That's a good risk reward ratio
Hey,
for a
Kobe,
financing point.
can I ask you a question?
Yes, of course.
You had on this trade here, you had a wow, your original stop was how many ticks you said? I guess it says 59,570.
It the original stop, and this is not the stop. This is just in here because that's 0.6%. So
Right.
from 570 to 90, that's 400. On
Mhm.
a 60,000, 1% is 600. So 400 is a little bit more than half a percent.
Right.
So that's basically just an emergency thing if whatever the computer crashes or
Yeah,
I
right.
don't know, something bad happens, an earthquake.
Hmm.
But you know how my stops.
Or tighter.
Um, I have just because I looked at a small sample size On the sample size from the 25th of last month to today, to the 10th, the average tick size of the Bitcoin trades, uh, like basically a maximum adverse excursion from my entry, uh, is 34 points. 34, we're trading at 60,000. So this is not only
Wow, like
this is not
$34 in Bitcoin? Wow.
this is a tenth of a
Yeah,
percent. So this is really very little,
it's
a
very
tenth of a
little.
percent.
Yeah, I mean, I wouldn't have the guts to ever have a stop that small. I guess because I go in early and I need a wider
No, and
stop.
I didn't. The stop here is 400 points, which is plenty
Right.
fine.
That's fine.
That's
That's what
like
mine's like
that's
around that, a little bigger. Yeah.
that's less than a percent. It's fine. That's not what it's about. As I said, these numbers here, they're arbitrary. That's why we didn't go finance at 6743 because it's printed in real time.
Yeah,
Since we
that's true.
didn't
That's true.
get over this thing, so don't take these measurements. These measurements are just guidelines for myself. If the trade would be on a higher time frame, what am I allowed or what to do, whatever. It's just it's basically just a cheat sheet for myself. Um, if I would trade quarter size, how far I could go. That's really what this is. Um, so next slide, please. So again, you guys realize what this is all about. It's these blocks, and here is now the end of the day, and the cycle turns itself again. And again, this is actually also a chart for the cycle that when I made the weekly charts and the daily charts 2 days ago, of how far I think that the retracements will be going before returning. And this is basically only fulfilled now that that V comes to the real support resistance line of these diagonal lines within the weekly downslope. This is the daily upslope. Remember that I made that post yesterday about the predominance um, of chart patterns within the Bitcoin cycle. And here would basically be the reference, and again, it is fulfilled with the beauty principle of that overshoot size being identical to how much we overshot today. So we had a pretty strong bounce here in the rest of the New York session plus Bitcoin trades 24/7. So this is actually fulfilling what I said before, um, the wick compensation. So now the wicks on top and below the bar are not equal, a little bit more bullish, but at least you could call this a wide range doji. I mean doji from the perspective of obviously the bar the open close bar is a little bit too wide for a doji, but I still, for me, this is still a doji uncertainty bar, so to say. This is more sideways than it is directional, from an indication for the next call. That was the last slide, I assume, right?
Yes.
Okay. So, um, and I managed to finish this in that hour that we have time for our Thursday calls. Femo or Matthew, any questions about all the other different tools and maybe more inspirations of how to
Well, I
look at chart a
yeah, I
different
like
way?
how you talked about how when you use the hourly, you're looking because I'm also looking for that smaller edge too with that volatility, but you're also looking at how this candle forms on the hourly to give yourself an added edge. And that would be good for me because I see general areas, but sometimes I'm in a little early and it's kind of painful to sit through a chop. I'd rather be a little bit more patient, be okay with missing a move, and then get a higher edge candlestick probability, maybe on an hourly step in a time frame.
And the major trick really is to close the lower time frames. I saw that you are very dominant on the 15 right now, which is very good for what you're doing. But when you started to be more focused on the S again, the 5 minute chart tickles you too.
Yeah.
And it is only principle based. The less data you burden your mind with, the more likely are you containing, because remember that there's a reason why we have, what is it, 7 digit, 9 digit, 4489, why we have 9 digit telephone numbers, because that's the limit of what we can contain. It is way more difficult to contain a 10 digit sequence than a 9 digit sequence. So I hold it, I'm wrong. 443 is 11. 11 is easy, 12 is difficult. And so we have these limits of short-term retention periods of data. That's why I already mentioned out these blocks. They also fulfill that principle that as soon as you chop that number down into an area code of 3 and then the 2 blocks of 4, you only deal with 3 blocks now. So as soon as you build data blocks, you're easy to manage them. And this is in a way what this counting down, basically what I did with the trade just now, where it says, okay, prep is 10, trigger prep attention is 9, uh, reaching diagonal and trend line is 8, reaching the lows is 7, having a bounce 6, being at the lows again 5, overshooting the second low 4, having action reaction principle 3, entry at 1. So this is how it goes, because each time when you make a mark of these blocks, you basically erase the previous tail. That means when you first had an area code and 2 4 blocks, and then you forget about the area code, now you can add a specific department at the end with 2 more numbers because you want to reach seat 11. Then maybe you get forwarded to the next end. So you can add blocks at the end because new data is coming in, because you're scratching out blocks at the front that you can forget about now because they're already in the past. You don't need them for your position, for your execution procedure anymore. So if you're only looking at 60 minutes, you cannot see any 15-minute double bottoms, 5-minute quadruple bottoms. All this data is lacking. All this data is, and you don't need it because you can see that action reaction on an hourly just as well as on a 15 or a 5 minute. And to be honest, the smaller the time frame, the more meaningless. Meaning you actually looking at that chart and the chart formation that has the higher edge as much as your mind, and this is why these things need to be conditioned, is longing for more data because it thinks, oh, if I have more data, I can make a more accurate decision. It's exactly the opposite in trading, because trading is counterintuitive, meaning you now focus on the more meaningless, in principle, less meaningless, smaller time frame. This is why professional scalpers also don't look at 1 or 5 minute charts. They do this either off the tape or of a higher time frame. So, and we're talking about professionals, not all the scalpers that just lose money. So, it is, that's a very beneficial rule of today's presentation is go to the higher time frame, chunk down your preparations, be prepared in one of these blocks, meaning look at the larger sequence with a story. Where are you coming from? What's to be expected? So, for example, for me, it was very clear when we did not go with that move upward through the previous today's and yesterday's lows, that this was just a retracement for the continuation short pattern. So I financed that 311 with that second push, on that second push up, and said, yeah, okay, that's all I get, which is fine. 311 and what did you say? We had 338 or 328 for a 7-tick risk. That's still a very fine risk reward ratio for financing. And the rest gets just stopped out at at break-even entry levels. All that debate, also with the smaller time frames of, oh, maybe this is coming back, maybe I should re-enter this. No, you should not re-enter something like this. We're trending against the grain, we're trending against the V, we're trending at a day that was first sideways and then broke down in the doldrums or in today's session, the directional down day. Is it worthwhile to risk that trade? Yeah, well, 7 ticks. It's always worth 7 ticks because if you're looking at the chart that's still on the chart, we'll see to the left that last time at this 100% retracement level that basically we're talking about of that trade today, we had two uncertainty bars of sideways dojis before a large down move. So in our case, before a possible large up move from a beauty principle perspective. And I risk that anytime because we know how difficult it is to get uh, into these moves of Bitcoin if you come at a later time. And since we had insurances, gold and silver, and I count Bitcoin towards that whole thing too, and going strongly up today, there was a good chance for a possible turning point. Even so, we had these V probabilities, and in general, this being the second leg of down. That's why I also made that sequence that maybe should be refreshed, being watched, of the pattern dominance in Bitcoin because we as a whole, this is a second leg down from the upper rim of the dominant weekly downward channel and could go all the way down to those expected lows. But that's another fish to fry. We're not trading weekly, monthly right now. We're trading for tomorrow. So if you're looking at the chart right now, we had a nice week here. Obviously, the call for tomorrow is a sideways day. It's most likely not a sideways to up day, even so the beauty principle of last time to looking to the left white circle would indicate so. This would be an aggressive stance, but a wide double bottom taken, or even more ideal, action reaction principle to today's lows. Um, that basically be the attractive setup for tomorrow is I'm basically expecting either a sideways doji or even better a hammer. And we're talking only price pattern chart analysis right now. I have to look through the whole daily call, but at first glance, so to say, this would be a likely play for daily call for tomorrow. Okay, guys, that's it. Any more questions? Otherwise, we'll call it a day.
Hey, Kobe, thank you so much. I'm good and it's very helpful, and I'm sure everyone's going to appreciate it because, hey, this was great going through the daily call and looking at some other edges that folks that are used to the daily call might not know about.
Okay, thanks a million for coming out, everybody.
Thank you, Corey.
And I wish you a lovely day.
All right, guys,
You too.
take care, everybody.
Bye bye.